Here is a question that might genuinely stop you in your tracks. Are we living through the worst Bitcoin bear market in history? As of today, Sunday the 12th of July, 2026, Bitcoin has been grinding through a prolonged and punishing downturn, one that has erased enormous gains from its previous cycle peak. Headlines this weekend are declaring this potentially the darkest chapter Bitcoin has ever seen. But when you actually sit down with the historical numbers and compare this cycle against 2014, 2018, and 2022, the data tells a far more complicated and frankly surprising story. What we found challenges almost everything the loudest voices in the market are currently saying. So what forces have pushed Bitcoin to this point? A billionaire investor who commented on this situation at the end of June 2026 identified three clear drivers. First, persistent macroeconomic pressure. Central bank tightening throughout 2025 and into this year crushed appetite for risk assets across the board. Second, a sustained wave of institutional profit-taking from the 2024 to 2025 bull run created relentless selling pressure at every attempted recovery. Third, regulatory uncertainty across several major markets has frightened retail participants into exiting entirely. Crucially, data from February 2026 revealed something that most commentators glossed over. Whilst the Fear and Greed Index was firmly in extreme fear territory for retail traders, institutional holders were not selling. That split between panicking retail and steady institutional hands is a historically significant signal, one that has preceded recoveries in every previous cycle. The impact on the ground right now is stark and measurable. Retail confidence has been badly damaged. Many smaller investors who entered near the 2024 cycle highs are sitting on significant losses, and trading volumes on consumer-facing platforms have fallen sharply as casual participants walk away. However, one of the most surprising data points emerging from on-chain analysis is this: long-term holders, defined as those who have held Bitcoin for over 12 months, are not capitulating at the rate you would expect if this were truly the worst bear market on record. In the 2018 and 2022 downturns, long-term holder selling accelerated aggressively as prices fell. Today, that behavior is notably more restrained. The sentiment is brutal, but the structural selling that defines historic market bottoms has not, according to current data, fully materialized. What does the near-term outlook actually look like? An analyst who correctly called the broader market correction back in October 2025 has since made a surprising prediction: the measured, drawn-out nature of this particular decline, rather than a sharp, violent capitulation, could set the stage for a recovery that catches most people off guard. Historically, Bitcoin bear markets characterized by lower-than-average long-term holder selling have tended to resolve with stronger upside moves once macro headwinds ease. The clearest trigger to watch remains central bank policy. Any meaningful signal of rate cuts would likely reignite institutional appetite for risk, and Bitcoin has consistently been among the first assets to respond when that sentiment shifts. So is this Bitcoin's worst bear market ever? On raw sentiment, it genuinely feels that way. The headlines are dark, retail confidence is at a low ebb, and the losses for those who bought near the top are very real. But the underlying data, long-term holder behavior, institutional positioning, and a direct comparison with prior cycles, does not support the narrative of total collapse. What the numbers reveal is a market in pain, yes, but one that is not exhibiting the full capitulation signals seen in 2018 or the brutal 2022 collapse. Every previous Bitcoin cycle has rewarded those who understood the data over those who followed the headlines. Size your risk carefully, do your own research, and remember, the most alarming moments in Bitcoin's history have rarely marked the final low.